Hello everyone, this is Harjinder Sandhu, and today I want to give you an overview that how you can cover yourself financially in case of critical medical emergencies. So stay with me for next few minutes as I walk you through the strategy to protect your hard-earned savings. We never want to think of a situation where we might get diagnosed with critical medical condition like heart attack, stroke, cancer, but things do happen. Due to advances in medical technologies and shortage of medical professionals, the recovery periods are longer than expected. And while going through recovery, we face emotional, physical, and financial stress. We all need to realize that during a recovery, we might stop or reduce our working hours, but bills will not. The monthly mortgage, car loan, and other expenses are still there. In addition to the loss or reduction of your and your spouse income, there could be many out-of-pocket medical expenses which are not covered by OHIP. For instance, prescriptions, hiring a private duty nurse, caregiver. But let us first understand, are we really at risk? How much risk are we talking about? Let us have a look at some statistics from Canadian Cancer Society and Canadian Institute of Actuaries. It is estimated that 1 in 4 Canadians are at risk of getting diagnosed with some kind of heart disease, and it is observed that almost 50% of heart attack victims are under age 65. Almost 50% of Canadians are at risk of getting diagnosed with cancer. Those statistics are a bit worrying. The good news is that due to medical advancements, people are surviving longer than expected. The other day, I was listening to a podcast, and it is observed that on an average, the people are living into their retirement for 20-25 years. So there is a need to protect your savings and there is a need to protect your retirement assets. So there is a need to have a plan. When diagnosed with medical condition, you can always go ahead and use your savings. But alternatively, you can cover yourself for critical medical condition through a critical illness insurance. The way the CI insurance works is if you are diagnosed with covered medical condition, the critical illness insurance will pay a lump sum tax-free claim and you can use the payout based on your priorities. You can use it to cover your out-of-pocket medical expenses. You can use to pay out your mortgage and other loan payments while you are recovering. There are different policies covering different medical conditions. Some policies, most of the policies, they do cover the big ones like heart attack, stroke, cancer, brain tumor, kidney failure, and the list goes to 25 in most of the companies. There are some additional illnesses which are covered in case of young kids, which are more common in case of young kids, and some policies do offer the benefits of early detections. And this is the feature that I personally like the most, that if there is no claim in your critical illness policy, the insurance company will return 100% of your paid premiums. While buying a CI policy, it is important to understand the specific exclusions and clauses. We can always discuss further. Feel free to give me a call and I would be more than happy to discuss more details. As I always say, protect your investments with insurance, and that is the key to successful financial planning. Till then, stay safe and I look forward to speaking with you.